Great. Guys, welcome everybody. Glad to be with you. My name is Sol. Thanks for joining. Before we get started, please, on your chats, change your settings so everyone can see what you type, not only host and panelists, but everyone. That will be more interesting for everyone. And second, remember, we're going to be trading live market conditions. So anything I say here or show here is not meant to be sell or buy signal. It's only the way I read the markets and I execute trades and I manage trades. And I want to show you some principles that you want or you can apply to your own strategies and situations, but you need to be responsible for your own trading. Now let's, with that being said, let's jump into the charts. And as you know, guys, we have on Wednesday, we're trying to do like a little class session where we teach or discuss a certain topic or something we can afterwards demonstrate in our trading. So I want to discuss with you a topic, which is, let me share my screen here. Great. So I want to discuss the topic of fixing trades. Okay. And I'll just type some things, and I will take just 5 minutes or 10 minutes, and then we'll jump into the trading. But I want to take just 1 minute to discuss this topic because I think it's a very important skill to develop, the fixing trades skill. Okay, so let me type here. Okay, so some questions I want to ask myself before I'm trying before I decide if it's a trade worth trying to fix. Okay, so the first thing I want to ask myself is this good or a bad trade? Okay. Now, what I mean by a good or bad trade is if it follows my trading plan, okay, my trading strategy. I define good trades, those who follow my plan and my strategy, and bad trades that does not, okay? And of course, there will be good trades that will make money and lose money, and some bad trades that will make money and lose money. So when I ask myself this question and the answer, this is a bad trade, this is a trade I don't want to try fixing anymore, because trying to fix bad trades, it usually always goes into a deeper and deeper loss. Okay, so this is something I want to take into advantage. I want to, when I'm into a bad trade, I just want to, as soon as possible, acknowledge that and get out of the trade. Okay, close the trade. And not trying to fixing a live trade. Okay, if that was a bad trade, I'll try to fix that bad trade in the next trade. Okay, taking a good trade. But a live bad trade, I want to manage only to either take profit or make the loss the smallest as possible. But if this is a good trade, then I wanna ask extra questions. Okay, so if I took a bad trade, which is going in against me, okay, then I have some techniques that I can use to fixing the trade. Okay, so one thing I can do is, of course, closing. Okay, close the trade. I can hedge the trade, or I can add into that trade. Okay, scaling, add to that trade. But the clue, okay, and the most important thing about fixing trades is starting small. Because if okay, do I have risk? Do I have risk left? Because if I went into the trade with my maximum position size, okay, if I took all my risk, my 1% or 2%, I don't know how each one of you guys measure risk or approach risk, but if I've gone into the trade with my maximum risk allowance, so I have no more room or flexibility to use in order to fix the trade. Okay, so the first question. Hey, Lucian. Hey, hi, hey, Sam. Hey, everyone. Glad to be with you. We're just discussing the fixing trade topic today, and we'll jump into the trading just in a minute. Okay. So I need to make sure that if I'm going to try to fix a trade, I have to have risk, okay, or lot size available to do that. Okay. Otherwise, I will, if I'm in my maximum risk allocation, let's say 1%, and in order to fix that trade, I'm going to use another 1%. And if both the trade and the fixing trade fail, I'll end up losing 2% or more. Okay, so that's something I want to avoid. In order to fix trades, I have to make sure to start small and then leaving room and lot size in order to fix the trade in case it's necessary. Okay, so if this is a good trade and I have risk left, okay, position sizing left in order to do that, then I can go to the different techniques, which is sometimes closing the trade, hedging the trade, or adding into the trade. No sound. I hope it's on your side, Mike. Everyone else can confirm me. You can hear me. Okay, please. Okay. So we have sound. Okay. So what I'll try to do is we'll jump into lower timeframes, and I do this just to show you full setups, and then I'll walk you through. I'll talk out loud my thinking process in order to fixing a trade, because it's not something you just do every time the same way and it works. It's something you need to practice, and it's something you need to approach differently every time. Okay, so I'll give you an hypothetical example on larger timeframes, because my processing will be easier to explain, with larger timeframes. But then we'll go and jump into lower timeframes. I will try to use the same logic. Okay, so I'll give you my analysis on the Euro USD, and I'll give you an example of what would I do on large time frames, and then we'll jump. Okay, so quick analysis on the Euro USD. We have been through very unexpected movements, okay, in the markets. We had this large consolidation, okay, this one right here, the just market, okay, and we were stuck weeks inside that sideways movement. We broke up buying signal, okay, retested that area, failed to continue up. Instead of that, we went all the way down and broke very powerful to the downside, which is now, okay, this is an outside range, break to the upside, and then break to the downside. That's a sell signal. Okay, so then we would expect the test of that area. Okay, and we have the retest, and we have supply here. So we would expect a continuation lower, or at least a reaction lower. We had none. Okay, instead of that, we moved all the way to the upside and we broke up. Now we're retesting this previous high here. We didn't break it. That would be a much clearer buy signal, but we did form this V shape. Okay, you can see this V shape patterns, which is a buying signal in terms of chart patterns and price behavior. So what we're looking now is a pullback from this movement. This movement was kind of overextended. We're pulling back, and next movement, at least statistically wise speaking, should be a continuation higher from here. Okay, so we have the high. This is a potential low. Next movement could be a movement higher. Fundamentally, of course, we have all the inflation coming into the US, but I guess as well in Europe. So it makes sense for the Euro USD to make now a leg higher. Okay, it's something it wouldn't surprise. Of course, since we have had these movements, we could see all the way a deeper pullback all the way to retest the lows. My approach, my bias would be right now slightly bullish, okay, around that area. If we zoom in a little bit on to the hourlies, okay, so we see the drop down, okay, and we see the drop, okay, the rise up, and we can see this demand very, very clear, formed right there. Okay, we see the demand moved, and we compress towards that demand. And if we just move this into the right, we can see we tested and reacted already. So we are reacting right now to that demand, okay, mid-range demand, but very clear, very powerful. I can't remember what news we had back in there, but I'm pretty sure it was caused by a news announcement, this one. So so we retested that demand and now reacting. And of course, today we are reacting to this supply. Okay, you can see this supply, and we're moving down. So right now it's a very, we have this dilemma. Are we going to continue up, okay, following the demand movement, or we have a deeper down movement caused by the reaction of this supply? This movement right here, there's not much behind it. If we go to the 15-minute chart, you can see there's not a lot of volume. I wouldn't consider this not even like a clear support or something. There's almost no volume here. So in terms of key levels or something, I guess we will have something more clear here, of course, down here. And the movement down hasn't been that aggressive. Okay, the reaction to the supply hasn't been that aggressive. You can see we're kind of also pressing down. We also have FOMC today, later on the day. So usually on days like this, we have a lot of low volume and ranging days in anticipation of the FOMC statement, FOMC speech. So today I would be trading intraday with a slightly bullish bias, but just aware of this could go any direction, and I expect more choppy and sideways movement more than directional movements. Okay, that would be my approach. Now I'll go back. So Lucian, that was the ECB speech. Inflation is concerning. Okay, so yeah, that would explain the movement. Now, if I want to, I would like to walk you through some exercises I did, because back in these weeks I have had to fix some of my long-term trades, most of them successfully. So it worked out pretty well. But let me tell you what I did, okay, and what I did, okay. So so if we go back in time to this movement, okay, this break up right here, I was expecting the retest of this demand. Okay, there was demand. If you go to lower time frames, you will see the demand, and I was expecting a reaction, okay, a continuation from these levels, a reaction higher. Now that didn't came, but my setup as a setup was valid all the way, I think, to those levels. Okay, so I was willing to build into long positions, okay, all across those levels, and I built one position at the demand that failed, but I didn't close that position. Okay, I kept it open, and when that went against me, there was another key support back here again on lower time frames that was very easy to spot, and I added into that position. Okay, and everything I do, so that one kind of failed. Okay, but my whole setup, my macro perspective was valid all the way to this point. So at some point right there, okay, I added a second position, and I can't remember if that was this movement or this white movement, okay, but using the profit of this lower position, I was able to profit on that one and close the first one at break even. Okay, so I made a little bit of profit. I wasn't very very comfortable with with the setup anymore. So that's why I closed the trade instead of letting that one run for longer, because that pulled back deeper than I thought. And, you know, this first touch, okay, that was a demand, which when that failed, created a supply. So when my second trade went up, reacted to that same level, now as a supply, and pulled back all the way down. So what I did was using the add-in technique, okay, in order to fix this failed trade with another buying position, and I was able to pull a little bit of profit from this lower trade, and I closed the upper one at break even, did a little bit of money, and closed out everything. Okay, now my bias, now I told you it's bullish. Okay, so let's say I am expecting this movement right here. So what I need to think, what I need to have in my mind is different scenarios. Okay, let's say I consider, you know, this a pivot point and I go long. Okay, right now I buy here. Okay, what are the next scenarios? If this goes and my stop goes, my initial stop would be there. If this goes in my favor, great. Okay, the better. But if this starts going against me, okay, I need to ask myself, do I close the trade at the stop, or what happens if I don't? Okay, if I don't take the loss right there at the blue line. Okay, if I don't take the loss right there, there's a good chance all this price action will go all the way to these levels right here. Okay, so depending on how big, okay, I'm getting into right now, I can decide if I can, you know, let this one go all the way down here, or I should take the loss back here. Okay, so in this case, okay, don't taking the loss at the first stop would end up the door for a very, very large movement down, which I don't want to be holding. That's a lot of pips against me. That would be from my entry point, okay, here all the way down here. It's more than 200 pips. That's something I don't want to be holding, especially because if this goes all the way down, my only scenario, okay, is this turning into a kind of double bottom, I guess. Okay, this is now reacting as a pivot point. If that fails, I would need to see if there's enough demand, okay, enough demand back here, so this becomes a potential double bottom. Okay, if that's a potential double bottom, so we might see the reaction that might save my trade. Okay, something like that, and I might take, you know, a break-even trade or something like that. So for me, in a scenario like this, okay, right now makes more sense taking the loss, okay, not trying to fix it, taking the loss right there. And with new information, I will be more prepared for my next trade. Okay, in that case, I would let the price out of the market. I let the market going all the way to the bottom, and depending on price action, I might decide to add, okay, to fix my previous trade, but now with a new trade, and not holding all this, you know, for so long, for so many pips, this risk right here. Okay, I hope that makes sense. So in this scenario, I run in myself different scenarios. Okay, if that fails, that will go all the way to down. That would be a double bottom. That's a pattern that sometimes works, sometimes, you know, doesn't work. So it's not something I want to be relying on. Okay, but I guess that's the thinking process I use and I do in order to decide if I want to be fixing a trade or not fixing a trade. Now let's try to do that same exercise on lower time frames. Okay, so we did the analysis. My bias is slightly bullish, but you know, price action now on lower time frames looks kind of ugly. Okay, not a clear pattern here, especially because we have no key supports or something here. So if I'm going to be buying, and I need to be ready for this continuing lower all the way probably to these lows right there. So I just need to be careful. So I'll be for the position adding method. What size do you start at? So I try to start with a 0.25% or around that area. Okay, 0.2, and that gives me the flexibility to add. Okay, on my larger time frame. So so from the distance from my entry point, which was there to there, okay, that was a 0.2 trade. Okay, 0.2% trade, and my fixing trade was an extra 0.2 trade. So if both trades haven't lost, I would have lost around 0.5%, okay, in that trade, something like that. but for example here, okay, in this scenario, which I have a clear stop loss area and I don't have areas to fix in between, so I want to take more risk. Okay, I want to take my full risk, so maybe 0.5% or 1% on this single trade, which is because I'm not going to try to fix this trade in case it's going against me. Okay, so if you have possible scenarios and possible fixing scenarios, you want to start small. If you're not trying to fix the trade, because there's nothing to do in between right now and my exit point, and there's no sense on trying to fix it, then you can use more allocation on that one. Okay. Okay. Let's see the 1 minute. Very ugly chart. I think we are reacting from supply. We saw the previous supply, and we might push all the way to these levels. So bias is up, but momentum right now is kind of down. I'll try to build into buy. Okay, let me take a little buy. Oh. Okay, and today, let me profit as points. So so this, for example, okay, this is a good example. If this, where's my stop on this trade? Okay, because I could place my stop down here. Okay, that could be my stop, which kind of would make sense. Okay, to get out of the trade right there, because again, there's not much, okay, to stop this continuing lower. But if I start very, very small, I can add trying to find the bottom of this movement, and as long as this continues with this pattern, okay, this choppy pattern, I'll be able to scalp a little bit. Okay, I won't be looking to hold a lot of trades or to swing today. I don't think it would be wouldn't make that sense on a day like today, where we have news ahead, and so I'll try more to scalp today. Okay, so but let's do the exercise. Okay, instead, in case that breaks down, okay, if this breaks down, what would need to happen in order for me to fix this trade? Okay, I could anticipate the next normal movement. If this is a break, I can expect, okay, something that happens, a retest and then a continuation lower. So I could try to catch, to keep buying in order to catch this next movement, okay, the retest, so I can fix this first trade with this lower trade. I can try to break even, but I need to remember that the next natural movement, in case that's a clear break, would be to the downside. okay? So my chances of fixing this trade, in case it breaks down, would be trying to catch this moment right there, okay? So that's an exercise. It's something I run every time. And if I think that's too risky, okay, because there's not a lot of support, so maybe there won't be support back in order to give me that retracement. So maybe I just need to take the loss, okay? Maybe if I see the break, I just need to close the trade, take the loss, and re-enter the trade. In this case, when I'm trading small, I'll give myself the flexibility to build, okay, and to build into a position. And again, as long as in the 5-minute chart we continue this pattern, choppy pattern, compressing, and doesn't turn into a running market, I think we'll be able to scalp a little bit both sides. CN, you see a head and shoulders here. So I'm very tempted to, to bring my take profit up, but I just don't see. I took profit. I was tempted to take the, take profit up, but I don't have a clear take profit area. maybe here. Roshan, by how much you scale in, it really depends. There's a class on the YouTube channel in which we spoke about scale in, and the way I do the maths in order to scaling in really depends on the day, on the setup, on the price action. It's not something I have fixed. It's something I do differently every time. Okay, but go to the YouTube channel, go to there's a playlist called the classes, and we did one of these sessions on Wednesday about scaling in, and I explained the technique a little bit better. And of course, we spoke about hedging. I'm not a huge fan of hedging when I'm losing. I do hedge when I'm winning, so I book profits and I make money on both sides. But for fixing technique, okay, let's say that was my buying trade, and that's my my stop loss. And if I want to, instead of taking the loss, I hedge the trade. If I bought up here, if I bought with 0.1, down here I can sell with twice the size, okay, 0.2. Then I would cancel, kind of close 1 mini lot, and then use the extra mini lot to make profit in case this turns down and runs, correct? I find myself many times stuck in both sides, so it's not something I use as a fixing techniques, but I do know traders that have mastered the hedging technique in order to fix trades, okay? It's something that you can also practice. Roshan, what it means actually? It means opening the opposite side of the same trade. So if you're in a buy trade, you open sell position larger than the first one in order to make profit on the other side. Okay, I guess that's the US market. That's the volatility from the US market. I'm tempted to sell because this pressing market has consumed supply, and sometimes we see let's sell. And here, for example, I will sell again up at this area. Okay. So I have a little bit of supply, at least on the 1 minute chart. There will be some resistance around that area. So if this runs against me, I will sell again in that area. And if that fails, then I need to close the trade. Okay, because or I need to readapt, because then there's not much left all the way to these areas. Now I have new information, kind of rejection. Let's see if there's follow through. If that fails, that tail fails, okay, that's a selling signal that failed. Okay, I need to that might be my exit point to this trade. Okay, I'm with new information, with new information from the market, I can adapt my trading all the time. Okay, I have a mental stop right there. I want to watch price action around that area. Okay, very bullish candle on the 5-minute chart. Okay, now I need the market to break in order to get to my take profit. Market needs to break this low. Okay, let's see if we have the opportunity to fix this trade. Okay, so it's going again. I want to wait, and I will slowly add maybe another sell and another sell around that area. depending on price action, and I will try to fix this first trade. Okay, that will be a good exercise. Now this level might work as a future support. So if this goes up and reacts, this will act as support. So I will try to place a trade, a sell order there. We take profits around this red line, and with those profits, I will try to fix this loss here. Okay. Now all my setup breaks down, around these levels. Okay. Above that levels, I want to be out, because if market breaks that level, then it might run all the way, to these areas, and I want to be holding trades for that long. Okay, so this would be my kind of my fixing area, and if that fails, I'll take the loss. Okay. Before trying to fix this, I need to ask myself, in my context, I have any chance of fixing this trade? Yes or no? Okay. So on a 5-minute chart, we spoke about momentum down. I also spoke about, supply being consumed here. So I'm taking a little bit of risk of trying to sell this area if there will be no supply. So let's watch price action and decide. We had a little rally, sideways rally, and it's something to tell me this might go down. Okay. And if in case this pulls back, now I want to switch my analysis to start building into buying positions. Okay. Right now, there's no point right now on buying, because I'm buying at the very top of this movement right there. But I do want to buy after a pullback. So I want to catch the pullback with a sell order. I want to catch the pullback and then slowly start building into long positions. Now I'm more comfortable with that analysis, because we spoke about the long-term bias being bullish. So I want to, so I'll feel more comfortable trading long than short. Okay, so let's try to do that. I hope I didn't miss the sell entry. We spoke about this level. So around this area, I want to start building longs actually. Guess I was slow there. So look at that. Okay, that was a pullback I needed to catch. That was slow, and then we said I want to build longs. Okay, and also was slow there. No, too many things happening at the same time. So I guess that was the opportunity to fix this trade. Okay, so trying to fix this right now would be only increasing risk. That's not something I wanna do. So I'm willing to take that loss, and now I'll look for the next setup. Okay, so still long. My setup is still long. I'll wait for a pullback. Next pullback now on the 5-minute chart. I haven't had that yet, and I'll try to go long on the market. Okay, I can try to use, if there's another reaction, but I've missed this supply. We might be reacting just to this resistance. I'm not sure it's going to be a lot there. Let's watch a little bit. Yeah. Well, I mean, I hope you got the idea. On lower times, it's always, you know, very fast, so you need to be kind of focused. Right now, my very next trade needs to be a sell trade. Okay, because I want to be long, but I cannot be buying right now. I need to wait for a new pullback or sideways movement, wherever. This red line, that would be a break of this resistance, but trying to buy the break, that's a great example of, you know, false breakouts and fake outs. So I first want to see the break up, and then the retest, and then the continuation higher. Okay. Okay, I sell the resistance. Maybe I can try to mitigate a little bit of the first loss. Again, I think there's a lot of bullish momentum, and I really like to be on the long side, and I'll try to do that. But I can try to mitigate a little bit of this losing trade. I only sold 1 mini lot. If I've sold 2 mini lots, then it's a little bit more risk. My stops are all in the same place, but I can, but with less pips in my favor, I fix the whole trade. Okay. Now break of these points there, that will be okay. I might close both trades. So for this trade, it's only adding less than 2 pips with the potential of fixing the first trade. Okay, so it's fine. Okay, now you can see how every push lower is rejected by the buyers. Again, I want to wait for a clearer opportunity of being on the buying side of this market. On the 5-minute chart, we haven't seen a pullback. So if this just keeps marching up, I will still be looking for a sell position after, okay, before buying. Now, without the lower trade, without the lower position, this upper position is a great trade. You know, it's selling at resistance. You have tight stops. You have a good reward. You have the potential to go all the way down here. So that's a good, by itself, this one is a good trade, which is always important. In this case, I'm only trying to fix the bottom one. So you can see how it's working, okay? Yeah, let's see if it has a little, okay, a lower push. Okay, now you can see the PNL. Okay, now let's, okay. Okay, when it was flat, that was a great movement, great time for closing. Okay, let's see if there's a little bit continuation. Enrique Luis, what do you think of market cycle? What do you mean by market cycle? Enrique, please tell me, and I'll try to answer. Okay, guys, but I hope you got the idea. There was a you know, instead of closing, I point out it was kind of break even. So that's how I use the trades to fix one each other. Click a number of bars bull, a number of bearish bar several times. Not sure what that means. I know price cycles and time cycles, but I don't, market cycle, you mean like seasonality or something like that? I'm not sure. I'm not familiar with the. Okay, I guess was around that area where I was break even. So let's plot those ones, trade history. Okay, so we're speaking of this one, which I was slow in the closing, okay, but that one lost about 5 pips. And this one, the upper one, made about 5 pips. Okay, so this position on overall, maybe with the commission was slightly a slightly losing trade, okay, but it was kind of a break-even trade. Okay, so that was a good example of that, okay, of fixing the trades. Now, in case of this breaks up, I want to be out of all trades. Okay, my setup has broken down, and I don't want to be holding positions above that. Okay. So my next trade will be waiting for the market to come a little bit lower around that area and start buying. And again, if that continues down, I'll keep buying all the way to this area. And my exit point will be will be down here again, because for the context of the market today, FOMC later, I expect more a sideways movement and choppy market than running market. So based on that, I'll be playing both sides of the markets. Will feel more comfortable trading long side just because of the long-term bias. Okay, that's it. Okay, guys, thanks for coming. Great session. Nothing tomorrow, but next week we're gonna have a trading room, and next Thursday, make sure you register for Dr. Gary Dighton's second session. Okay, on this series of webinars, very important, very powerful. Really, it will help you with your learning curve on your mental side of trading. Okay, it's very important content, and there's not a lot of ways to learn that. So make sure you attend. Thanks guys for coming, for staying. Raushan, for bootcamps, yes, not for summer plans, but bootcamp and all the other programs, you can get it. Thank you guys. See you next time. Bye.